Okay, well, the market's down about 60 points or so at 17,882. Amit Khurana of Dolat Capital Market is joining us to take some questions on markets from here. Amit, great to have you on the program. Thanks very much. How are you reading the market? I mean, the price is, if you just go by the price, momentum has been pretty one way. And today, it's seeming a little down, although twice over so far and only half the session is behind us. Two dips have been bought. Do you think that will be sort of the defining way market behaves, which is dips will continue to be bought? Or are you expecting a little bit of a turn here? We had Rohit Srivastav earlier, who's expecting the latter, which is the market rolls over from here. He says it's too overstretched.
Thank you, Prashant. I think that's really the question we've been trying to ask ourselves, and in our conversations with the client. It started off as a bear market relief rally, but is this now a bull market belief rally? Is the big question really. Short term, definitely, it looks like a stretched one. A lot of stocks have gone up. Nifty itself has rallied by a good 18-19%. So purely based on the short-term data point, short-term understanding of how we see overall trajectory, I think we're probably closer to the top. But having said that, I think there's a lot of news flow which has been absorbed in this rally, both positive as well as negative, especially the negative one, wherein the concerns on inflation are relatively lower. I would not say they have gone away, but they're relatively lower. And we're probably looking at interest rates topping out closer versus the previous scenario, wherein a much sharper rate hikes were being built into the consensus. So these two factors, I guess, keep conflicting, whether we're at the top of the inflation range or whether we are starting a slowdown. These two factors, I think, from here on will determine a lot of whether we go up further without much of a correction, or whether we actually correct quite a bit from here over the next 6 to 8 weeks. My sense is it's an important inflection point, and the markets will take cues as the data starts rolling in for the next month and the month next to that. I would expect some deterioration in the data here and there, but the domestic data will continue to be quite supportive. So ballpark, important inflection point. It could go either ways, but at this stage, I am playing a bit of a caution here.
So when you say you're playing a bit of a caution, waiting for the inflection point, which could be on either side, what is the approach? Are you taking money off the table, or are you holding more cash? What is the way to approach this bit of caution?
Well, what we're advising clients is obviously take off money on the tactical positions at least, and obviously try and raise cash and go a bit more on the names which have not performed up to the expectations till now. So, for example, we remain very bullish on pharma. We think that the overall risk-reward ratio, especially considering the valuations, the sector hasn't done much for the last 18 months. But as we get over the next 12 to 18 months of product pipeline, overall valuation spread, that looks much better position to generate some alpha. We're also bullish on the domestic consumption themes, which we believe are more structural plays rather than just tactical. So there we are backing on the durables space in particular, where we believe that the next 2 quarters will be the first festival season that we will get to see after 2 years. And remember, CY19 was not a great festival season for these companies anyways. So that remains one of our favorites. We are also backing up real estate. And the last but the highest conviction is on banks. I think structurally we are looking at a lot of levers at play in most of the banks at play. And if interest rates really do not have to go up as high as was initially apprehended, then I guess banking space will be the one which could really drive earnings at the macro level as well as for the Nifty, so to say.
Okay, so that is banks, real estate, and which are the other two you said?
Durables.
Durables. Okay.
Yes.
All right. So 3 areas. And I think you summarized it nicely from relief rally to belief rally. Of course, there's a question mark at the end. But always nice speaking with you, Amit. Good having you with us here on the program. Thanks very much for your time.